Most investors in the cryptocurrency market are going to screw up. They're going to sell at a loss. They're going to sell too early. They're going to fumble potentially generational wealth. But I don't want that to be you. I want you to be on the winning side. I want you to be the person sailing away on the yacht with your beautiful family and knowing that your financial freedom has been secured from this wild opportunity in the cryptocurrency markets. And that can be you, but only if you don't screw it up. So here's a guide to, well, hopefully help you not fumble your bags. The first and possibly biggest critical mistake that people are making when entering a position of any cryptocurrency is that they do it without any kind of plan at all. I get it. Look, I know the market moves fast. You need to move fast. You need to ape ASAP. But in most cases, you actually have more time than you think, and aping is not necessarily the best call. You can usually make a leisurely entry into your coin. So there is time to have a plan. Now, what do I mean by having a plan? Well, let's break it down into buying and into selling. First part's buying. This is actually the part where most are really, really quick to do it, and they do it poorly. And here is the secret of making profits, that most profit is made when you buy the coin, because a bad entry will significantly alter your ability to make a good profit on a coin in the long run. You need to buy low, obviously. And if the market is raging higher and you're getting that FOMO, maybe it's time to be patient and to try to wait for a better entry to come, because they usually do come in the market. There's regular, frequent, giant, brutal corrections. You can also just set a time range and buy in for a set amount of weeks or months, creating an average price entry, dollar cost averaging in. But the time to do this effectively and still make good profits is potentially running out, since the major accumulation period for the market has finished. Still lots of opportunity, but it's not as easy as it used to be. Ideally now, moving forward, you're going to be looking to add positions when we have major dips, not on major pumps. Now, part 2 of the plan: when do you sell to actually cash in on your good entry? Well, this breaks down into 2 segments. First is selling for a loss, and second, selling for a profit. And we have to talk about selling for a loss. So here's the scene for you. The FUD's high, panic is in the air, bad macro news, prices are down. It's time to sell, right? But the fundamentals of the coin that you bought have not changed, just your opinion of it because the price is down. In fact, maybe the fundamentals are better. There's a new partnership that just happened or a new tech update. Maybe the market's ignored this because everyone's just generally freaking out right now in the crypto space. This is sadly when most people sell. I want to be super clear though. It is okay to sell at a loss sometimes. Obviously, it's not ideal, but it's okay to do sometimes. But you don't want to sell just because the price is down when the whole market's down. That's just fumbling your bags. But instead, you want to sell because, look, the team's failing to deliver on their promises, not hitting deadlines. There's no hype for the coin. The community's dying or has abandoned the coin because of one reason or another. The partnerships aren't working out. Something like that. That's a fundamental reason to say, hey, you know what? Maybe I was wrong and I need to exit this even at a loss. So a fundamental reason that was determined by you, of course, when you bought this, obviously. So you write it down. If I see this happen or fail to see this happen, then I will sell because they are not meeting my expectations. That is a reason to sell at a loss, in my opinion, because you might be holding a loser and it's time to get out and move into a winner. Okay, so it is okay to sell at a loss sometimes. Keep that in mind. And that should be part of your plan. What are the catalysts that would make you do that? Now, second part here, of course, is you have a winner. It's going up big time, huge hype, big partners. They're hitting their deadlines. They're hitting their goals. Community's really excited about it. So when do you sell that one? Well, price projections can be really, really hard for assets with little price history in the cryptocurrency market. So perhaps you want to compare it to a similar coin or have maybe a set multiplier goal in mind, i.e. when it does a 10x, I'm out, or I'm going to take some profits out. You can have a laddering goal as well. For example, every 100% gain, I take out 10%. So this way you make sure you're getting yourself paid. Or you might say something like, okay, big macro cycle, I'll sell 7 days after the Bitcoin Pi cycle top indicator hits, regardless of anything else happening in the market. There are a lot of different ways to approach it, but you do need to sell to profit at some point, because make no mistake, if you don't sell, you're probably going to lose out. When the greed is high and you're feeling like a genius because the numbers on your phone are so big, it's hard to do. This is why writing down a clear plan that states the conditions on which you're planning to buy more, sell at a loss, or ideally sell at a profit can really help you out, because it will help to keep you a bit more sane, a bit more focused in times of extreme fear and extreme greed, which happen frequently in the market. Now, before we move on to the next part of this guide, I wanted to let you know about the Wealth Mastery newsletter. This is the best damn newsletter in the crypto game. Happens to also be my newsletter. Every week, my team and researchers and I are working very hard 40 plus hours a week to find you the latest and best opportunities in the cryptocurrency market. We're talking about altcoins, meme coins, DeFi, gaming, airdrops, charts, and much, much more. You can join our 125,000 plus weekly readers for free using the link down below in the description or over on the pinned comment on X. Now let's talk about conviction, also known as sticking to the plan. Now, a useful experience might be to FUD your own bags. What are the criticisms of the coin that you're holding? Why could it fail? Know the answers to this, and you'll be much more likely to be able to weather the shitstorm when it probably is going to come, because most cryptos experience it at some point. But in terms of conviction, there should be some kind of underlying thesis that keeps you focused on why you even bought these damn things in the first place. Why did you pour your money into this thing? Why did you think it could do well in the first place? There are a few things that come to mind here. The first are the short-term catalysts, because here's the thing, not every position needs to be held for years and years and years and diamond hand it forever. You can hop in and out of short-term plays because of short-term catalysts. For example, let's say there's like a Solana ETF rumor that's starting to swirl around. You want to capitalize on that if it's true. So you position yourself accordingly. Maybe a mainnet upgrade or a rebranding is coming for some coin that you're in or looking to get into, something like that, which you believe has the ability to impact the price. Now, once you make that call, then you need to, of course, have the balls to hold until that thesis actually plays out, and then to sell when it does play out. Because usually post these big announcements, there's a big correction. And when that big news happens, when most people will come in and buy, but not you, because you're smarter than that. The second area of conviction is building a bigger thesis for the cycle. For example, you believe that DePIN, decentralized physical infrastructure networks, or artificial intelligence, or Solana, or Base, these are going to be the big, big thing. Maybe you're focused on 2 or 3 of those, like Solana AI coins, for example. And instead of putting money into every sector of the market, you decide that, you know what, you know the AI thesis, you know the base thesis, so you're going to focus on base AI coins. You understand the potential. You have the time and the energy to keep on top of that narrative. So you make a few, hopefully, well-placed investments in those narratives. You don't need 50 coins to do well here. You don't need to be the jack of all trades and master of none, essentially. So find your areas of interest and immerse yourself in them, right? So be the master of some instead of the master of none. For example, I don't really care about NFTs that much. SocialFi, decentralized science, real world assets, Cardano ecosystem coins. I'm not interested in those, and I don't think about them or talk about them very much. I don't really invest in those very much. I focus on Base, Solana, artificial intelligence, gaming. I dabble in some other narratives, bit of DePIN, meme coins, whatever. But when you have the conviction of the narrative that you're buying, then you stand, in my opinion, a much better chance of having success. The third is the long-term picture. Well, most altcoins, they're going to fail long-term. You need to understand this. But crypto is not going anywhere except up long term. So there's a bit of a disconnect there. But you have to have that big picture view of ETF money flows, for example, possibly hundreds of billions of dollars by 2030. User growth metrics from 400 million to 3 to 4 billion estimated by 2030. You're going to fade that? For example, right? So this is something to keep in mind, because you're going to be much better prepared for the volatility when you understand that big picture. But this is really only about those blue chip coins, Bitcoin, Ethereum, Solana, Avalanche, Chainlink, maybe a few dozen others. Those have a strong chance for being long-term success coins, inter-cycle coins. And if you can accept the volatility, you can even hold them through the cycles if you really want to do that to yourself. Or, of course, you have to also understand that profits from riskier altcoins need to be taken, but they can also be parked in those blue chips to maintain long-term exposure to the market. So you take high-risk altcoin money from meme coins or whatever, and then you plow it back into ETH and Bitcoin, whatever. Now we need to talk about mistakes, because plans and conviction will be challenged. And here are probably some of the most common reason why people are going to screw things up. And the first is probably one of the biggest ones, and that's following others blindly. Social media influencers, of course, can be great in helping with research or in highlighting an opportunity that maybe you might not have heard about before. Okay, so that's great. But, big but, you should never blindly follow me or anyone else. I've got my own risk parameters. I have different experience from you. I get access to deals that you might not get access to. I talk about my bags because I know my bags, and I make plenty of mistakes, okay? Don't think that I don't, because I do. And And that applies to all other content creators, okay? At the end of the day, it's a lonely game because it's just you sitting at your computer pushing buy and sell buttons. It is your money and you need to think for yourself. I don't know if I can highlight that enough. You need to do your own research to build your own conviction in what you buy. If you don't, then your chances of fumbling the bags are very high. So if you follow others blindly, then you are going to fall on your face. And of course, that leads us up to the most critical point. No matter what, at some point, you're probably going to need to sell probably all your altcoins. No matter your levels of conviction in an asset for the cycle, you need to understand that the odds are against you between cycles. At some point, the bear market will come. Asset prices will plummet dramatically. Top coins go down 70 to 90%. Most coins go down minus 99.99%. And that may be the most important part of conviction because you need to have the strength to sell when others are panic buying and foaming into the market. You have to have conviction that you will sell to secure your gains. People are going to call you an idiot or a fool. Only a fool would sell right now. But in truth, only a fool would buy at that point. The vast majority of people, they come in late and they buy high. And they'll tell you that you're an idiot for selling into their buying. You must have the strength to sell when the time comes. Okay? Remember that. If you don't take your profits, the market will take them for you. It's very efficient at doing that. Thanks for watching.